The residential real estate market ended the year with a whimper, but our next guest says we could face a more stable year this year. Let's go to Ross McCredie, Chairman and CEO of Sutton Place. Ross, thanks for joining us today.
Thanks for having me.
What would you say was the biggest drag on the real estate market residentially last year? Was it just job fears?
I think overall, the numbers are interesting that we've stabilized as we have. And I was actually kind of surprised that we ended up being as flat as we have. And prices haven't decreased that much in reality because real estate is perception. And the perception out there has been pretty negative. So I think on whole, I was a little bit surprised that we've stabilized the way we are.
Okay, so let's dig in a little bit more to what we saw all of last year. Were there trends that you noticed more regionally when you look at the numbers?
Yeah, and I think that's an important thing. So CREA's numbers are out, they're national numbers. I think in order to really understand the numbers in the real estate market, you have to go locally. And then when you go into even each local environment across Canada, then you have to go into specific product types. So a big bulk of the Canadian marketplace in terms of real estate is Ontario for the vast part, and then BC being kind of second. But a lot of the negative press that you've seen on that has been on the multifamily and has been on the investor product, which for the past 4 or 5 years, the Canadian government and the provincial governments have done a great job of getting rid of real estate investors.
Okay, so talk to me a little bit about the inventory that we've been seeing, because we know inventory was higher. Clearly, more people were willing to sell, but was it just the mix that wasn't right for people who want to get into the market? For example, were we seeing enough new development?
Yeah, and I think that's been the problem. A lot of times when people look at new development, it takes anywhere from 7 to sometimes 12 years in Ontario to develop a multifamily high-rise tower. And I don't think people fully understand that. And so a lot of the product that was designed and built over the past 5 to 7 years has been geared 70% of that towards investors. And so they're building smaller units. And that really doesn't address what a lot of Canadians want in terms of housing. So there's been this huge lag in terms of product offerings that Canadians actually want across Canada, including some of the urban centers as well.
Okay, because it's hard to pivot, right? You can't, once you start a development, you can start and stop, but you can't really pivot to something else.
Yeah, and I think the developers got kind of addicted to that model of being addicted to those investors and the way it's been worked out. I think, unfortunately, too, I think we've created our own problem, and the government, at the same time, by trying to focus on housing right now, I think the Canadian government needs to focus on our economy and the productivity of Canadian workers, which has dramatically decreased over the last decade.
Okay, so when you look at the year ahead, what is your expectation for the market?
I think the market's going to be relatively, on a national basis, I think you'll see it fairly flat. I think when you go regionally, I think Quebec and Montreal, in particular in Quebec City and places like that, are continue to be very strong. I think they're used to a lot of whiplash in terms of headlines. I think what people don't really fully understand in the Canadian marketplace, that we've had 20 plus years of almost nonstop capital appreciation related to real estate assets. And that's not normal when you go around the world, and I have worked around the world. So I think people's perception needs, so the real estate values in your home are not going to necessarily go up each and every year. But more importantly, I think what Canadians need to start thinking about and advocating strongly with their local politicians and federal politicians and provincial is to figure out why, if we want to start building housing, what we need to focus on is jobs. The housing sector and developers across Canada are some of the best multifamily developers in the country, whether it's single family, like companies like Mattamy Homes in Ontario, which is a phenomenal single family and multifamily builder, including across the country. So the government needs to just build through the infrastructure, get rid of regulation, and make sure that we can be competitive and creating jobs for our Canadian economy.
Okay, when you look at rate cuts, which we did have last year, are you factoring in any sort of uptick from possible rate cuts this year, or do they not really count as much as they used to?
Yeah, I don't think it counts as much anymore. I think the last 2 years has been frightening for a lot of people because they got in at a relatively free money back in 2000, 2001, 2002. And so those people that had to refinance their mortgages in the last year and a half, and even this year, it's been problematic. But I can say at 4%, and we are down 2%, but at a 4% interest rate, that's relatively inexpensive. And again, when you go globally and you start thinking about what lending rates are, Canada remains one of the more lowest in the world. So I think 4% is a reasonable number for people to be thinking about going forward. So from that perspective, I don't think one way or the other is going to change the housing market or get first-time buyers into the market if we drop a percentage point.
Ross McCredie, I'm going to leave it there, sir, but thanks for your time. Ross is Chairman, CEO of Sutton Group.